Welcome to Chit Chat Stocks, the podcast that helps you find your next great investment. I'm one of your hosts, Ryan Henderson, and I am joined today, as always, by the one and only Brett Schaefer. This is our weekly Investing Power Hour episode where we talk all things financial markets. We do these live on Thursdays at 5 p.m. Eastern Time, usually, but we're going a day early because I've got a flight. So we've got a whole lot of news to talk. Earnings season has officially kicked off. We have a rumored acquisition of PayPal, as people have been calling it, since I think it's in like nearly a 90% drawdown. But we will get to that and more. Before we do, I want to give a reminder that if you enjoy these episodes, please leave us a review. It helps the show grow. A lot of people do it, and it really helps, and it helps us maintain a free show. So thank you if you're able to do that. And check out Brett's newsletter, The Emerging Moat Stock Research Service. It's a lot of great write-ups and great coverage on his personal portfolio. But without further ado, Brett, where do you want to kick things off?
Well, Ryan, we just started recording after the England-Argentina game. So Ryan, if he seems a bit in shock, it's kind of that post game come down. No, I will say congratulations to Argentina, but I feel sorry if you are an England fan. That must be a tough life. I know we have some English listeners, so yeah, I wouldn't wish that upon my worst enemy.
Yeah, I can't imagine they listen to our show live, just given that it's probably middle of the night there. But you know what? They're still up. So if you're up in England and you're reading about that game, feel free to tune in to Chit
Yeah,
Chat Stocks
exactly.
Live.
We'll try to distract from that. Apologies if you're listening on Friday morning and you just heard another mention of that tragic match for you guys. But yeah, we're getting into earnings season. Have a little bank earnings. They all seem to be doing fine. The economy hasn't collapsed. Let's see. Buffett case study, Stripe going after PayPal, and more stuff in general from Bubble Watch, as well as some listener questions. Ryan, maybe ASML earnings? We kind of got everything all over the place this week.
Sure, yeah. ASML is kind of like one of the first big tech companies to report, I think. And they're always a little boring, I guess, in that like well, I mean, you saw some explosive growth from the company this time around, but at the end of the day, it's pretty hard for them to ship like a surprisingly high amount of products because it takes a while to manufacture these things. So there's usually not any massive surprises with ASML's earnings. If you read the conference call, you can get into some of the technicalities behind what might be driving demand. But the only thing that really stood out to me was memory revenue. Memory revenue jumped 52% year over year for the first half of 2026 compared to a year ago. Let's see if I can find this quote from the management team. I don't think that should come as too much of a surprise, given that you know these these memory companies are investing for capacity, and they've outlined that. So usually the demand is pretty well telegraphed for ASML, but the CEO of ASML said, we anticipate our memory related net system sales to grow by over 75% this year, which, if you're a memory stock investor, that tells you that all the companies are investing for increased production. So unless demand continues to outpace the supply, you are going to see at least some supply start to pick up. Other than that, not too many surprises. The only thing, service revenue now accounts for 30%, which is sort of a decade high. It's historically been kind of in the 20s, but again, that was kind of slow on the product side as well. So service revenue grew 32% year over year, and they are operating at 54% gross margins during the quarter. I put in parentheses here, don't you think ASML could hit those 70%, 80% gross margins like the memory chip companies are if they wanted to? If they wanted to kind of prioritize the short term.
That's fair. Yes.
But obviously, with less competition, they're able to kind of think longer term and want to maintain these relationships. So, or maintain their customer relationships. Not a ton to report here. I mean, it was a good quarter, but the stock's trading near its all-time highs on a multiple. I think it's around 60 times earnings at the moment. So I don't know if there's anything too exciting to give investors here. The stock was flat after hours.
Yeah, we have a $700 billion market cap according to our friends at Fiscal AI, PE of 58. With the backlog they're seeing, that's probably a fair number. Nothing too crazy, but I almost go every quarter. Yep, demand is high. Yep, they got the stock backlog. Yep, their margins look pretty solid. Uh, Nothing else much to say.
Yeah, and it's like even if revenue, because revenue is pretty lumpy for them, even if it's not what analysts are expecting, people kind of shrug their shoulders because it's like, oh, okay, they sold 8 EUV machines instead of 12. Like they
I
just
think it's more than that, but
weren't able to
still.
deliver them. I mean, the EUV side might be around those
Yeah,
numbers,
true. Yeah.
but it's there's so much lumpiness to it when you have a product that sells for such a high per unit value. So yeah, I feel like people just end up kind of shrugging their shoulders every single ASML quarterly report. Let me just pull up the exact numbers on system sales. So total EUV system sales this quarter was around 16,
Okay.
DUV around 75. So
Nice. Well, hopefully one day they'll sell 70 EUV machines, and then whatever's next, they'll sell 10 at $1 billion a piece. Should we do another topic here, Ryan? I have a interesting case study I think is fascinating for earnings season. It's not the Buffett one I mentioned, but I guess it's not necessarily a case study either. It's more of a study. Someone did an academic study on this. Essentially, what happens is that if you go long companies whose 10K language or annual report, I assume this applies to quarterly earnings as well. If you go long companies whose 10K language doesn't change, and you short the ones that constantly change it, you earn 22% a year. So double the long-term market average. What do you think? Makes sense intuitively. We kind of see it quantitatively.
does
These
that
people
just
talk
mean
about
like
literally changing.
the text, not necessarily
Yes,
like the numbers are obviously changing every quarter. So 10K is going to change or not. Yeah.
it's the language, not the numbers. Yes.
Yeah, that's interesting. I mean, that I guess I probably would have assumed that just because there's less probably competition for those businesses that aren't changing their 10K language, plus less need to move into new markets and create fluff, I guess would be the kind term to some of these companies that are changing their 10Ks drastically.
Yeah, I agree. And is there a way to do this on Fiscal AI? If not, I'll send in a product request because I think that'd be nice. If not, this is a very easy thing to use one of the AI tools for the broad ones. You just upload the this year's PDF, last year's PDF of the annual report, and just say where are the changes in this document.
Yeah, I mean, it depends how far you want to go back, but Fiscal AI has all the filings. So if you've got the self-serve API, you can just ask Claude or whatever the connector.
Integrate it within that. Yeah, that
Yeah,
makes
you can just
sense.
say check the last 5 years of filings. Has the language changed for these companies?
I'm not an enterprise API user though, so unless you can do that, you're as an individual.
You can. You can do that as an
Okay.
individual.
All right.
Claude
I'm about to
plugin,
check it out.
Brett. I'll have to put you on. The yeah, that makes sense to me. It must be nice too if you're the IR department and you can just copy and paste last year's 10K and then change the numbers for some of these long running businesses that have had the same competitive threats for 15 or 20 years. So probably saving time and money there too. But yeah,
Yeah, definitely. I think it's a nice, not nice, short thing you can do as a part of your investment process. Check if there's any large changes, check if they consistently change, and then just put that as part of your checklist. Like, all right, it's not going to be the end of the world if they totally change this every year, but if they do or don't, that's a positive flag for management.
yeah, it's easy. especially once you've read a lot of SEC filings over the years and you've kind of built up that muscle, it's easy to skip over the K's and Q's, but this is a good reminder of why reading the K's and Q's is worthwhile for an investor, even if they don't change that much. Catching the smallest changes can have bigger impacts, but yeah.
At least read the important parts.
Yeah. Not the risk factors.
Mine
You don't
safety
read all of them?
disclosures. Yeah, skip over that little section. That's about 100 years out of date.
Yeah, I think the SEC should force companies to fit all of their risk factors into consolidated 3 pages maximum bullet points.
3 pages. We could maybe do 10. Well, depending on font, maybe standardized font.
Yeah.
This leads right into another not serious topic of the week, but I've been looking at Adyen. I may have shown you this screenshot, or you may have read it. I told you about it, but they had an annual meeting, and they had an open mic for question for any shareholders. And there was some interesting things to say about the recent acquisitions they've made, but I thought there was a hilarious shareholder who I'm guessing is a person from the United States. Think about this. They came all the way, maybe it's virtual, but they went all the way to this annual meeting to ask this question I'm about to read here very much. He says, I have 2 questions. One question for Pricewaterhouse and one for the board. When I analyze and read the annual report, it has 233 pages. Of those 233 pages, about 114 of those pages are about sustainability and governance, which I think is fine. I imagine him saying that in quite an interesting tone. And he continues, when I look at the financial review page, there's only half a page. My question is, would it be possible next year to expand that a little bit? The financial review from maybe half a page to 2. He went all the way to the annual meeting for that. And they basically said, yeah, we'll consider it. I would love, this is my ideal European vacation, is just going to every annual meeting and asking questions about their IR website not working and why they have 100 pages on environmental stuff that no one reads. I mean, it's absurd sometimes how long that section is. You just keep skimming and skimming.
This is, I'll talk about the report in a second. This is maybe one of the things I like the most about Fiscal AI is I no longer have to go to European investor relations pages. You can just do the IR content in the terminal. It just makes it so much cleaner because it's standardized. I have gone to so many IR websites with just outright broken links, pages that make it impossible to find the latest quarterly report. So yes, please, Europe, figure it out.
Maybe that just serves as an ad for fiscal.
Yeah, actually, yeah, maybe keep it up because it'll help us. We talked about this offline. What's the point for a company like Adyen? 233 pages on sustainability and governance. I guess it makes sense for a company that's like very impactful on the environment, like mining companies, stuff like that, describing what all they're doing. But company that sells payments processing software, maybe some hardware, seems a little pointless. But
I think it's a whole scheme to get into the sustainability funds, who also had questions at the annual meeting. I skipped those, but there was some actual meat talking about the change in management and the acquisitions, which was nice. So people should go read that.
The irony
or read my update coming on Friday.
I'm sure it helps with financing, getting whatever sustainability bonds, stuff like that. But the sustainability premium, I don't even know if there ever really was one. It's gone. Adyen is trading flat over the last 5 years. The stock's down like 60%, if I'm not mistaken, from highs. So, I don't like it when companies pander to institutions or try not pander, but try to fit within a certain bucket so they can have certain shareholders. Like, you will get the shareholders you deserve over the long run. So just talk about what you think is the most important on your annual report.
Yeah, it's 100 pages too. Let's keep it to 5, and then just toss some other pages for investment analysis. That would be good,
I would
I
also
think.
understand it for a company that's trying to hide their financials. You know, they don't want to talk about that. Maybe that's not the biggest bright spot for a company, like for certain companies. But Adyen, they they should be happy to review their financials. They're great. They're extremely profitable. They should, brag about that. But anyways,
Yeah, let's see. We have a comment here that management should only have an ESG policy if they exploit a natural resource. If not, you don't need it. Yeah, I agree with that one, Tyler. Second one here. Hey guys, what is the bear case for Adyen? I, I get a little scared looking at them. Full disclosure, I am a shareholder at the moment because I can't find a bear case. Maybe the capital allocation is poor from a capital returns efficiency standpoint. But besides that, I really, really struggle, which maybe it makes it a fat pitch. But on the other hand, you always get nervous when you don't understand the bear case, except for, well, they're in payments and payment stocks are going down. That seems to be what's happening.
yeah, I think part of it is just the sector that they're in. The other element, they have for a long time been sort of head-to-head competitors with Stripe. Processing volume for Adyen has not grown at the same clip that Stripe has reported. Now, granted, Stripe can kind of report the figures they want and they can acquire processing volume too. But I would say the two concerns would be Stripe potentially pulling away. Again, I don't know how much they're actually stealing volume from Adyen. And then,
That's not happening. It's just because Stripe is tailored or concentrated in Silicon Valley, and you have a lot of startup revenue kind of flowing through that. I think that's temporary, but again, maybe if it continues, you could be right there.
sorry, just to follow along, but isn't startup revenue them Stripe pulling that in? Isn't that great for Stripe? Bad for
That's
Adyen?
well, let's just say there's a huge boom in Silicon Valley at the moment. So there's more revenue for Stripe to go after. Adyen has less market share in that area. Stripe is gonna have the AI startups, and 80% of them are going to go bankrupt.
Yeah. The other part here is Adyen for a long time has got sort of pat on the back by the investment community for building everything from the ground up and not wanting to create sort of a patchwork that a lot of payments companies have become. Look at Pfizer if you want to see just a nest of crappy assets. Adyen has been starting to make some splashes in the acquisition world lately, which feels kind of like uh, pulling away from their core strategy. But again, I might be kind of reaching here for bear cases. I'm an Adyen shareholder as well, and I think this is an inflation protected business. They grow with their customers. They have reportedly some of the highest authorization rates in the industry, and they have a unified, clean payments processing solution in a
Unified
world.
global too. Let's get that marketing
Oh,
down.
unified
Global.
global streamlined payments processing solution, but no, having it all unified under one roof, having it be clean software that's updated on a regular basis, gives you the analytics you need as a business. That stuff makes a big difference, as opposed to feeling like you're working with some sort of legacy payments provider where the software is horrible and the uh, integrations are poor. So I do think that makes a big difference. I like Adyen here, but yeah, the sustainability page could probably be reduced. Pages could be reduced, and I think financial review could be expanded a little bit.
Yeah.
I'm on board with this guy's comment.
That whoever that shareholder is, we are with you in your activist campaign against ESG nonsense. And then on those acquisitions, yeah, I can understand that. They, I think at face value, it kind of flies in what they've been saying historically. We don't do acquisitions, but they're not acquiring payment volume. They're acquiring capabilities in kind of a different part of the billing and payment supply chain. One of them is in the billing like part, which is not necessarily like payments infrastructure. And then the other one is helping companies build loyalty programs. So I understand in that point where you're kind of acquiring product capabilities. But still, I mean, the company goes, we've never made an acquisition, we never will. And then they acquire two companies out of the blue instead of buying back stock. So they're probably in a little bit of prove it mode, but I kind of like the acquisitions, full disclosure. And I'll cover more in detail, I guess, on Friday's newsletter.
Yeah, let's shift gears. Oh, you know what I was gonna talk about? I don't know why this came to mind, but do you remember the iBuying phase?
Yes.
I've
D-
I've
Can
I've
we
been going through the home transaction process lately, and I've got to
can we
say,
officially congratulate you as a podcast for being a homeowner?
not yet. Still got,
Close.
which first of all, that's why
A lot of steps, yeah.
there's a lot of steps. There's a lot of things that could go wrong in the process. I mean, these inspections are very thorough. There's a lot of things that can, you know, go wrong with a home over multiple years of living in it. It was such a bad idea out of the gate, iBuying. Like, you're getting the worst inventory. Like, you couldn't even make money in one of the best home buying markets, maybe of all time, which I think 2021, 2022 rates were so low. They couldn't even make money in that time. It seems like such a horrendous idea looking back at it. So, anyway, I just thought about that. That's forever a knock to me on Zillow's management team.
I pulled up Open Doors stock right now. I guess that probably was a good short. What are they down? Yeah, they were at way, way higher than they are right now. But their market cap is $4.6 billion. I have no idea what their financials look like, but Ryan, are you still structurally short psychologically uh, if they don't change their business model?
Yeah, psychologically, I am short the iBuying business model. I think it's got to be just extremely challenging, and there's so much friction involved. It's not like, in theory, yeah, you got all this data, you can earn this tiny spread and make it up in volume, but that's just not how real estate works. Is kind of what I'm learning. So yes, I would say psychologically short. I think Redfin, they got into it too, didn't they? Am I remembering that right?
Yes, but their actual business model is a little different. I think they're out of it now. Zillow got into it.
I think
I
it was
remember there was room.
Zillow, Redfin,
Yeah,
and Open
Open
Door.
Door. Maybe some others.
Let me
We
look
can't be
this up.
too
Who are the
sure.
iBuying
Company.
companies?
There's probably some others that totally busted without even going public. But if we're going to stay within the Adyen and payment processing space, maybe we should talk about this giant rumor this week: Stripe going after PayPal. Ryan, do you have do you have the companies? Is it who we thought they were?
Oh, yeah. Open Door, Zillow, Redfin, and OfferPad, which I've never heard of.
Subscale. They're still coming. They're gonna take over the $100 trillion TAM. Okay, Stripe is going after PayPal, according to a rumor from possibly Reuters. They're combining with a PE firm, Advent, to find the capital to acquire or offer PayPal an acquisition of $53 billion. There's $6 billion in the last 12-month operating earnings for PayPal, pretty stagnant over the last few years. And apparently Block, Ryan's probably going to shake his head here, is trying to get in on the deal. I don't know why they can't help themselves. They really need to focus. They're not going to get the stock up if they haven't. Okay. PayPal. I guess I have the notes here. Maybe you're not looking at them. They once had a market cap of $360 billion. I think it's quite astounding what happens in bubble periods. And really during that time, us included, forgot about valuation. Because I think it was trading at 60 times earnings, something along those lines. It's tough. And now we're trading, you're going to get acquired at sub 10 times earnings. Levered, like for a levered buyout, that is an extremely cheap multiple on gap earnings. I'm sure that's whatever EBITDA, EV thing they're spinning, it's probably like 6 or 7 times.
Yeah. Why Block is even being mentioned in here, it
Oh, God.
boggles the
So funny.
mind. But
Merge Cash App and Venmo.
it's one of those things where it's like, If PayPal finds a way to right the ship, get payment volume really growing again faster than inflation, and they can find a way to be resilient to the mobile wallets, this could look like a great acquisition. I do not understand what the synergies are between Stripe and PayPal. It's two totally different payment infrastructures. Maybe you could
Well,
pitch like
Braintree, don't forget Braintree. They're
true,
acquiring
true, true, true.
some volume there, but that's what I think is beneficial for Adyen is the integration is always much harder than you think.
Yes, 100%. PayPal would be the first to tell you that. Look at their
Yeah.
business. They're a hodgepodge of acquisitions that don't communicate with one another at all. It seems. The Braintree potentially it's just an acquisition of customers here. They could buy PayPal to shut down Braintree, shift all of their customers off to Stripe. But I don't know. In the long run, is it better to just let them come to you over time? I guess Braintree is winning a lot of volume. That's been basically propping up the payments volume for PayPal lately. It's the erosion of the core PayPal button. It would be way more evident if Braintree wasn't increasing volume. So maybe that part makes sense for Stripe. I guess I hadn't really considered that. The what do you do about the core PayPal button? You acquire that and you basically just run it for cash, put as little resources as you can onto it, and just reinvest that cash elsewhere. I mean, that thing is it's it's just dying.
Yeah, it's we talked to Adyen. If PayPal's worth $53 billion, Adyen trades at I think in euros it's 27. Let's just say 30. And Stripe's at 150, might be 130. I don't know why Adyen's not worth twice what it is. On USD, it's 31. The EV's lower since they seem to just hoard cash on the balance sheet. Yeah. I would like if you're asking would I invest in a Stripe PayPal or an Adyen at these prices, 100% Adyen.
Yeah, price. If the prices were equal, I mean, I think Stripe's a really good business. That's why they get so much attention. But
Equal on what multiple?
yeah, I'm saying let's say they were both 30 times earnings. I think I'd probably rather own Stripe.
Well, yeah, they
But
have no earnings.
well, yeah, I guess that's. Let's
A
say
lot of
they were
multiple
similar.
expansion.
All right, let's just perfect world. It was a you were buying the same business, same price, whatever, and they had mature margins. I think I'd give the edge to Stripe purely just because I'm familiar with that platform and it seems really useful. I'm sure Adyen feels that same way too for customers there, but the PayPal acquisition, it has been a value trap for like 5 years, is what it feels like. It's had a dividend yield of, not dividend, let's go buyback yield, which again, not factoring in some of the stock comp here. It has had a buyback yield of higher than 6% for almost 5 years. But and today prior to this, it had a buyback yield of 17%. This I just don't see them generating significantly more profit as a business on their own. So I think the acquisition, like they are potentially, I could get behind this acquisition if I were Stripe investors, which obviously we're not because it's privately traded. But I would say kudos to Stripe if they're able to integrate this and port customers over from Braintree.
I agree. Yeah, it might be a good price. Might be a solid price. All right, should we talk Apple suing OpenAI? It hasn't been a good week
Yeah.
for Apple. Maybe a list because we're going to go deeper into this Apple suing them. There was a tweet from
Well,
Katie Miller. Sorry,
sorry, you
Katie.
said bad week for Apple. I think you mean OpenAI.
OpenAI. Thank you. Tweet here from Katie Miller. Sorry, Katie. I don't know what you do, but your tweet went viral. OpenAI's last 24 hours. Head of safety quits, sued by the New York Times. Top executive unexpectedly departs, shuts down their browser tool after 9 months. Sued by Apple and caught selling product to China against sanctions. Not a great week for Altman. Do you want to take us through what's happening here with Apple? Because that might be the most meaty of the news.
Yeah, so I'll just read a couple headlines from the news articles. It says Apple filed a lawsuit in a California federal court accusing OpenAI of a coordinated pattern of misconduct involving the theft of sensitive trade secrets. The complaint alleges that former Apple employees now working at OpenAI took confidential information to assist in the development of OpenAI's hardware products. First of all, did you realize OpenAI had hardware products?
Yes. So they're in development, yeah. They acquired Johnny Ive's company for $6 billion. Yeah.
Okay.
It's been known for a while.
But they haven't released any, correct?
No, they've just been a lot of rumors of that they're working on things.
Okay. Well, I'll go on with the headline, but I think that hardware would fail. Apple is seeking to stop these practices, demanding that OpenAI destroy any proprietary materials and redesign its upcoming products to exclude Apple's technology. Shortly after this, sort of unrelated, Elon Musk called Sam Altman a scam artist on X. Side note, totally unrelated, Elon Musk recently lost a very public lawsuit to Sam Altman. Altman responded, homeboy. Oh, I've got a dog barking here in the background, so apologies. Homeboy, you are the one selling public market investors on short-term space data centers. My question for you, for your own investing, do you prefer if your executives just don't have social media at all?
Compared to that, yeah, I'd prefer no social media. I was looking up Andy Jassy's as you were talking. His bio is probably written by a publicist. Lead Amazon, married, father of 2 kids, big sports fan, experienced buffalo wing eater. Go Kraken. He must be an owner of the Kraken. Or no, they own Climate Pledge Arena, I think. In
Yeah.
Seattle there. I like that. And then he tweets about great quarter. Nice to meet Prime Minister of India. We are excited about things ahead. That's better than Elon Musk and Altman, who are probably 2 of the most similar people out there. I wouldn't love it. What about this other one I saw this week? A company I don't own today, but I've used to own. I love the business model. I think Ryan likes the business model too. Did you see founder of Airbnb, Brian Chesky, basically putting on a thread of AI slop about crypto assets and token stuff? I don't even know. I didn't read it because within the few sentences you could tell it was AI slop. He seems to tweet, and I'm stealing this from our past guest, Buyback Capital. He seems to talk a lot about things, but never about Airbnb's core business.
Yeah, I hate it. It's probably my biggest pet peeve with Airbnb, and it's why I am afraid to make it a larger position for my own portfolio. He strikes me as just outright distracted. And I know maybe he's doing like great work behind the scenes. Maybe it doesn't even matter. But between his AI stuff that he's working, he should be in founder mode. Like they are not there yet. This isn't like jump off board and let the company run on its own and you just go join other companies' boards and talk about crypto. This is not.
They're kind of there. They generated tons of cash.
Yeah, but they're still like Expedia's got more volume than them. They've got a chance to win a lot of market. I mean, if they're already there, maybe I should be a little more cautious about my position. The reason I say they're not already there is because I think they have a massive runway for reinvestment.
Oh yeah, there's a ton of potential. I'm just saying, if I don't think it's in a fragile position as a business.
No, I just think you've got this huge runway. You've got a huge opportunity if you're Airbnb, and you've got your CEO founder seemingly a little distracted. Honestly, I didn't even see this tweet storm, but I'm pretty sure
Got deleted quickly.
He took it down anyways. Also,
it was funny.
If you if you start talking about crypto and tokens like 3 years ago, whatever, but we're past that. It seems like we're not seeing those press releases anymore from mainstream companies. You don't have to do
Hey,
that.
let's toot our own horn. We were calling BS on those the entire time. And people I respected kept saying, well, it might be the future. I'm like, yeah, these little monkey pictures, it's gonna be the future.
Hey,
But you're
remember
just doing that to
NFTs?
hedge. People simply were doing that to hedge their reputations.
Yes, they didn't want other people who were very into crypto to hate them. That's honestly my belief. The no one ever seemed to figure out the whole off ramp thing. Still haven't. It was the same question every time. It's like you can use this new method for transferring assets in some way. And it's like, okay, but I gotta buy groceries. How do I get those assets to buy groceries? It's like, well, we're not there yet. You're gonna have to transfer them through the standard banking system, and it's gonna cost you in fees. Okay, so it's not worth it.
Yeah, Vlad Tenev, I think, is up to no good at Robinhood doing things around this. What is his Twitter? It's gonna be bad audio. Okay, Vlad Tenev. He tweets a lot. Yeah. Okay. He says if you're a builder looking to embed stock tokens or RWA, do you know what that is? No.
I don't.
Into your applications, we want to hear from you. So they're trying again with this crypto stuff. This is what Chesky was tweeting about as well. Well, we haven't even talked this OpenAI Apple lawsuit. Did
Oh,
we get
yeah,
sidetracked?
whatever. They're poaching employees and they're taking a whole bunch of the ideas over from Apple. Apple sued them. I mean, if there's non-competes or there's intellectual property theft here, that sucks for OpenAI. I mean, that's going to be, I think, a pretty clear-cut case, I would imagine. But
Yeah, Apple loves lawsuits, and they're like Nintendo in that way. You do anything that breaks our rules, and we're gonna come down with you, on you like the fist of God, or whatever that saying
forget
is.
forget capex on data centers. Apple will spend it on IP infringement lawsuits, and I'm all for it. If you're an Apple shareholder, that there's a chance that's more profitable. The OpenAI just seems to take the wrong. Well, Sam Altman specifically seems to take the wrong turn every week, a new wrong turn every week. I mean, he took 6 wrong turns in the last 24 hours. The I just I can't help but think OpenAI, we won't be talking about them in 10 years, despite having remarkable technology and pioneering an industry. I just don't think it will be mentioned much in 10 years. It'll either be a part of some other company, maybe it's a part of Microsoft, whatever. It somehow becomes, it powers Copilot or whatever. But they've run the risk side of things so hot, and there's a general public disdain for ChatGPT across the board. So I think they've lost trust with customers and probably lost trust with investors a lot over the last couple of years too.
We're comment here from Tyler on the CEOs. CEOs can only lose by being on social media. My thesis can only be negatively impacted by a CEO being on there. You're probably right. Let's see. I was trying to look up on one of those prediction marketplaces the betting odds of an OpenAI bankruptcy. If you're setting, 0 cents to $1, whatever how it's priced, 0% to 100%, where would you buy like an OpenAI bankruptcy within the next 12 months?
12
Maybe we'll do
months,
3 years. 3 years. Just make it a little easier. I
three
would go
years.
50-50. I think 50%, buy 50 cents on the dollar. That's not a bad bet.
Yeah, I would say it's probably a 50-50 chance. 12 months, maybe not. I just believe they just did a big financing round and they've got the partners to survive, but those partners aren't going to save them over and over. So
Amazon's not going to do circular deals forever.
they're not going to sink cash into OpenAI 3 times. I just don't. I believe management will learn their lesson if it doesn't go well the first time. So, yeah.
Oh, Ryan's got his dogs barking again. That is loud. What's the dog's name? I don't think I've ever known. He's still
That is,
going?
he's still going. Murphy is his name.
Murphy. That's a good
Podcast
name.
appearance.
All right. Yeah, he really wants to get on and talk bank earnings, which that's our next topic. Let's see. Big banks this week. Seemed like they're firing on all cylinders. Ryan has a quote here. Maybe I can just read it for him if the dog's going crazy. Jamie Dimon saying on the conference call, it's getting close to as good as it gets. We just don't know how long it's going to last. He always has those quotes, just saying everything at once. And they have all the news, the financial media has it's kind of him talking, and it's a very, very serious look on his face. He's saying something eloquent. He was also at a shipyard promoting their lending to a submarine company. It was very funny. He's all over the place, my shadow president. But JP Morgan earnings per share is booming, $7.70 versus $5.50 a year ago. Wells Fargo up 25%. Citi up 50% to $3.15 a share. Bank of America up 34%. I mean, you got the investment banking business. The fees there are phenomenal. The lending business for corporate bonds and things like that. And then it seems like the consumer, sorry to the perma bears, everything's still okay. Do you remember the last few years when people said they almost guaranteed we were already in a recession? Like at some points, I would say like maybe, like I can understand those theories, but the people that would pound the table on that, just go back and look at what things people said. And once again, I think the economy is in fine shape.
Yeah, I feel like anyone can almost, no matter how the economy's doing, you can almost always convince yourself you're entering a recession. Like, yeah, you're right. Some people are down on their luck. There's a lot of people that are struggling right now, and incomes, you can find whatever supporting data you want, but these bank earnings would be completely contradictory to that. So,
yeah, that's a good point. Like the economy is so big, you can find some source of data, some survey out there. Remember that Michigan survey, the consumer confidence one that always gets posted?
yes.
Apparently, they changed from in-person calls or phone calls to an online survey, and that psychologically changes the answers and the constituents that do it. So that's why it's way worse than usual. It was just a survey methodology error.
Yeah, don't trust
Selling
surveys.
stocks because of that is ridiculous. As Riot's dog goes again. Yeah.
Yeah, it's a few hard rules in investing. Never invest in apparel. Don't trust surveys. Don't maybe don't invest in restaurants. Maybe that could apply. Be very skeptical of restaurants.
And don't bet that the economy is going to shit every quarter. Sorry for swearing. Yeah, banks seem good.
Yeah, the investment banking side especially, and I got a feeling it's only gonna. I mean, this quarter it's probably gonna be even better, assuming they generate some big IPO fees. Jamie Dimon. I don't know how he does it. He seems to nail it every quarter. He does a good job.
He's a good leader.
Yeah, I think he might be on my Mount Rushmore of CEOs potentially. And he has one of the hardest jobs too. I think running a bank is more difficult than running like a consumer-facing tech business or something like that. So, yeah, he might be on my Mount Rushmore. Let's talk Warner Brothers and Paramount. Not a whole lot. Well, I think there's a decent amount to discuss here, but 12 U.S. states are suing to block the purchase of Warner Brothers by Paramount. What is it? Paramount Skydance, I think is the full name. Here's a quote. California and 11 other states have initiated legal action to stop the $110 billion acquisition of Warner Brothers Discovery by Paramount Skydance. The lawsuit alleges that the merger would create a media behemoth with the power to raise prices and reduce content quality, harming consumers and industry workers. We'll come back to that in a second. While the U.S. Department of Justice previously cleared the deal, the states are seeking to prevent the merger from closing until the judicial process concludes. Paramount has characterized the lawsuit as a distortion of antitrust law. News came out shortly after that Paramount is considering a partial or full corporate exit from the state of California, where their main studios and headquarters are. So, let me put it this way: do you think Paramount acquiring Warner Brothers will ruin your viewing experience as a consumer for content?
No, I don't watch since I watch neither.
Bingo.
It doesn't matter. Are they considering the competition from small investing podcasts on Spotify, Apple Podcasts, and YouTube that a few thousand people listen to?
They should probably look into it. The
Yeah, I mean, I say that in jest, but there's so much competition in media these days. Anyone can become part of it. It's the whole kind of point of the modern world, or not the point, but yeah, everyone's a competitor. Doesn't really matter, and it just seems like spite from California, right?
yeah, yeah, honestly, I think at this point any merger by certain states will be sued to get blocked. But let's look at returns for just to support what I'm about to say. Paramount and Warner Brothers, both these businesses are not thriving, unless I'm mistaken here. Yeah, I don't think so.
No, they
So
are not.
it, it is one of the most intensely competitive industries, and you look at streaming time spent by consumers. There's almost you should almost be supporting it. If you look at the market share of like YouTube and Netflix, like you would think you want more formidable competition compared to those two. So whatever. My prediction is that this deal will go through, and it would probably be beneficial to consumers, if anything. Why would they?
Yeah,
Why would they merge to reduce content quality? That was a part of the antitrust deal.
again, this seems like spite because people are leaving the movie slash media industry, or at least the legacy industry, is leaving California.
Yeah, probably. Okay. Do what else
You
do
want
we
to do some
have here?
listener questions?
Yeah, let's go for them.
All right, this one, personal finance, blocking and tackling here. This is a very lame question, but what short-term assets do you invest your cash position in within IBKR? You can apply this to other brokerages as well. I have a NAV of less than $100,000, so I do not get a good rate for my idle cash. For myself, if I want short term, I usually, and I should honestly, we should be sponsored by BlackRock because I toss out their treasury ETFs. The iShares 0 to 3 month treasury bond ETF is SGOV. I believe the expense ratio is 0.1%. I like that one. Long term bonds, TLT, although that's a little bit of a different investment. That's not idle cash. That's the way I go about it. But I know you can directly buy uh, treasury bonds. I would just do that. I think SGOV, the short-term treasury ETF, makes it simple. But honestly, I try to be fully invested for the most part.
Yeah. Same. I'm in a bit of a particular, like, unique situation with the recent home transaction, but I would say I either have stocks and sort of fully invested as much as I can be, or I just have it in a high yield cash account. I'm not that most of the time I'm fully invested, so I usually just leave it in cash. But I think I would if I were looking, if I were bearish or I was looking for an alternative to cash, it'd be some sort of short term treasury ETF. Question for you. I guess, by the way, you mentioned BlackRock. They crossed $15 trillion in AUM this
Nice.
this quarter. So kudos to them. Do you think treasury rates, let's call it 10-year federal funds rate, will
What is the
be,
10 year? Let's look. I'll
do
look
you
up while
think
you're
it will be
talking.
higher or lower in 5 years?
It currently yields 4.55%. Oh God, it feels. It feels just like a solid number to me.
Same.
5
So you would
years?
say it's the same.
Yeah, that's cheating though. I am going to go with the take that it will be lower because we're going to be on the other side of the massive CapEx boom. And I think AI long term is deflationary. And then we have an aging population. So outside of the healthcare inflation, most other things will go down in price. Then Optimus comes into play, as I like to mention every quarter, and prices go to zero. But honestly, automation and things like that is generally, I think, deflationary long term. So I would say lower by a smidge. I would be surprised if it's significantly higher.
Yeah, it's always hard to see it in the short term, but if you zoom out 30 years, the automation has been deflationary. And that's probably why rates have been so low. And people constantly look at it and they say, well, that was the last 20 years, the last 10 years was abnormal. And this is, we're not even back to the long run average. But I think honestly, it's sort of a different era, if you will. We got
Yeah,
another.
if you last thing on that, we've never had an inverted population pyramid. Japan is a good example here. They have had like the opposite issue of inflation, where they have to try to stimulate the economy as they've gotten an aging society. I would take that as a case study, as what could happen if the United States starts becoming older. I guess if current birth rates continue.
Yeah. I do always find it a little peculiar that people just anytime a population declines, people say this is the beginning of the end. Like it can't always grow again.
Japan, oh, yeah, true. South Korea has had a rebound. All those day traders getting rich. But if you ever been to Japan, it's nice. Like they have a population collapse. It's fine.
Okay. Another listener question. It feels like appetite for classic blue chips may be at an all-time low. Take Intercontinental Exchange. Since the end of 2021, it grew operating cash flow by 65%. Share count is the same. Share price is also the same as the end of 2021. Now,
What's
I've
the
seen a lot
multiple?
of.
So
I would
multiple compression.
caution people against comping to 2021. That was a time of irrational exuberance in markets. So you could probably find endless charts where revenue and cash flow have doubled over the last 5 years and the stock hasn't changed. And that doesn't necessarily mean you get good returns from here. So,
Adyen, right?
yeah. And the New York Stock Exchange, yeah, I think they're going to be just fine. Although, watch out for the Texas Stock Exchange. Just recently started operating, apparently.
Yeah, wow. Look at this multiple compression. EV to EBIT might not be proper. PE is similar. It's 18 and a half. You have the New York Stock Exchange for the cheap. Maybe it's one we cover going
Yeah, I
forward.
do. I could see myself owning shares. I like stock exchange business models. They're very insulated, huge network effect, and it's not too expensive. Uh, but
Nope, not at the moment.
what do you? I mean, what do you think is an appropriate multiple for a business like New York Stock Exchange?
20 to 30, depending on where rates are, depending on how well they're run, depending on how well you like management. This is one that I immediately what's another example of this? Maybe in Amazon. I think, well, if I was 30 years older, I would love this.
I think, yeah,
But
yeah,
I'm looking for more. Maybe it's a false, but I'm looking for more growth at the moment instead of yield.
I agree. And it's not. You can still get obviously good returns. Maybe we're being a little greedy here, but it. I just think there's a lot of investment opportunities out there where you can get true 10 baggers potentially over 5 to 10 years.
Similar risk too.
Yeah, and it doesn't strike me as if you have a lower risk tolerance, NYC, I think, at 18 times earnings seems like probably a pretty good investment. Side note, there there has been a lot of discussion about them potentially being disrupted by prediction markets. Did you know the parent company of the New York Stock Exchange has committed nearly $2 billion to Polymarket?
Yeah, not a bad move. Could be a long-term competitor. Could be a nice asset to own. That's tough. Yeah, it's
Yeah.
or not tough. It's potentially disruptive.
Yeah, I feel like going back to the comment though, I think he's right. There are so many businesses that seem to be trading at mid-teens, high-teens earnings multiples that have been considered very high quality and durable for 15, 20 years. Out there right now, it's almost like drowning in opportunities. Truly.
Yeah, I agree. I agree. I find a lot of opportunities at the moment. It's harder to find what for me what to buy, what to not buy. Um, yeah. All right. Listener
When
question: Do
when we
you
did
track
that,
Circle or
just
go
real
ahead, Ryan?
quick, when we did that Fallen Angels or Falling Knives episode, there were 20 companies that we walked through, and I could have seen myself, maybe not all of them, but I probably could have seen myself buying 15 out of the 20 and being comfortable with them in my portfolio. And that, I mean, that was only a snippet of the companies that are down. You look at the S&P 500, there's a lot of market darlings, in air quotes, down 45, 50% year to date.
And make sure to check whether it's trading at 15 times earnings or still at 30 times earnings, because there's some things like a Ferrari that are still a little expensive. Yeah, okay, we have a question. Do you track Circle stock? I don't. I believe Ryan doesn't, but for the listener here, I would recommend going to our friend Travis Hoyam at Asymmetric Investing. He covers them quite well. I like reading his reports on Circle. Ryan, let's talk bubble watch slash just funny news from the week. This is a Mad Libs headline. FIA, the buzzy shopping app co-founded by Bill Gates' daughter, is claiming credit for online sales it didn't actually drive, a Bloomberg investigation found. Had it all and still went to fraud. I'm going to
Are you
share.
talking about 30 under 30 star
Yeah, that's
via
true. Yeah.
Gates?
Did you see their Series A announcement, which they raised $35 million? I would think Bill would be able to
What, from
do
their
that.
dad? I
Yeah,
mean,
no. This is the it looks like a music festival announcement. I'm gonna read off maybe all of these names. Here's the investors. 1, Khloe Kardashian. 2, Alex Earl, Jessica Alba, Priyanka Chopra Jonas, Sydney Sweeney, Paris Hilton, Mindy Kaling, Ashley Graham. Uh, I'm saying this wrong probably. Halsey, Carly Kloss. I don't know who a lot of these people are going down, but then it gets good. Vlad Tenev,
oh my
Robinhood,
gosh.
The Chainsmokers,
Vlad
Olivia
Tnev, the
Culpo.
chain smokers.
I know who the Chainsmokers are. Let's see. Shabuzi, Sahil Bloom. I know who that is.
Gonna.
Who could have seen the signs of this?
Gonna on there. Yeah, it's oh my gosh. The do you know what the business does? Just
It was supposed to, yeah, it's actually check. They were, you know what cookies are now, right? They were cookie stuffing. So they were pretending to be attributable to sales for e-commerce when it wasn't them.
yeah.
Yeah,
The 30 under 30 doesn't miss. It really
it's
doesn't.
nice.
If you want to be on Fraud Watch, check that list every year. The That's a bummer. Did you see the Oracle of Omaha, Great Uncle Warren, had some words about Gates today?
Yeah, he's like, I've had some bad friends, not as bad as that. Yeah, leave it there. I love, yeah, when they do his charity announcements, they make it as a press release for immediate release.
Yeah.
I'm giving my shares to my children. Um, okay, here's the last thing before we get out of here. There was a very fascinating article in the Wall Street Journal about blockbuster stock sales threatening to overwhelm the bull market. I have a chart here, and it's a chart of the annual issuance of U.S. stock. I'll maybe share it, but you can see a significant bump in 2020 and 2021, coinciding with that other boom and bust cycle. If we look at this last chart here, this is 2026, but remember, this is 2026 year to date. So historically, it's been around 200 to 300 billion dollars in the 21st century. 2020, 2021, or 2021, it got up to 540 billion dollars, and year to date, 2026, we're already at 345 roughly billion dollars in U.S. stock issuance. The
On
quote here,
pace to surpass 2021, 2022.
on pace, yes, to surpass. There was a lot of good data from this. It says overall, U.S. companies will issue a net $500 billion of equities, including buybacks, over the next year, compared with a net reduction of $1 trillion in recent years. So that's a $1.5 trillion swing from capital returns to capital raising. I think this is interesting. It's probably why the hyperscalers. It's interesting because the hyperscalers.
Interesting, kind word for saying toppy.
It feels toppy. Yeah, there's a classic Howard Marks quote in here where he says, nothing. He says, it's difficult to predict when rising stock sales and slowing buybacks might weigh on stocks. Just as important, he says, they are unlikely to be enough by themselves to end a bull market. Always ride that fence, Howard.
Yeah, that was really one-sided comment. He does a very good job of saying a lot while not taking any sides. I find that chart pretty concerning, but it's not like I don't necessarily find it surprising. You see all the news about IPOs and equity raises and what Google just did, for example.
Anthropic might be about to later this year.
You usually have some idea that this is happening, even if you don't have the hard numbers. So, yeah, it's more support that times are good at the moment.
And it's probably, I'm guessing why the Mag 7 hasn't, maybe it's lagging what it used to. They used to be buyback machines. That's like Amazon. And then you had index fund flows. You had earnings growth. It's kind of hard to bet against that momentum. And now there's some issuance working in the opposite direction.
Yeah. All right. I think that's going to do it. We're in the heart of earnings season. So good luck to all our listeners this Q2 earnings season. I'm going to sign things off here. Thank you, everyone, for listening. We want to remind you that Brett and I are not financial advisors. Anything we say or discuss here on Chit Chat Stocks is not formal advice or recommendation. We may buy, sell, or hold any of the securities discussed in this podcast. Thank you again, everyone, for tuning in. We'll see you next time.